Hey, good morning, everybody. Today is Wednesday, February 17th, 2016. My name is Cliff Backus, and this is your push button StockTrading.com daily video market review. Much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. The C in CANSLIM stands for current quarterly earnings and sales, and reminds us that we should be looking for stocks that have a minimum of 25% year-over-year increases in quarterly earnings and sales, and preferably accelerating earnings and or sales. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify leadership in the market on a daily basis. So let's get started with that. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 9 were from the airline industry, 7 were from semiconductor devices, specialty apparel had 6, internet-based services had 6, and rounding out the top 5 is packaged foods. Recently, we've been seeing a lot of packaged foods, and we've been seeing a lot of semiconductor devices. These may be good places to look for leadership in the market, if and when we confirm the uptrend. Let's start this morning by taking a quick look at the Russell 2000. As you know, I've been saying recently that the Russell is the key to the market going forward. Russell last week found support down here in the 958 range. That support was the late January low, and the next level of resistance appears to be this trend line. This trend line was the lower half of this channel that was established when the Russell 2000 broke down back in November of last year. We'll see if we can better this resistance area right in here. Once we've taken out that level, the next significant level of resistance is in the 1040 area. I want to see the Russell take out that 1040 area before I'm going to get overly bullish in this market. Let's take a look at what the NASDAQ Composite's up to. But before we do that, the M in the CANSLIM acronym stands for market, and to my way of thinking, this is the most important element. So let's take a quick look at the market. Stocks continued the roll they were on at the end of last week, with the S&P and the NASDAQ recording accumulation days. An accumulation day is any trading session when an index is higher on higher trading volume than the prior day and indicates professional buying in the markets. That's bullish. It would be encouraging if we could string a few accumulation days together here. That noted, our market timing model remains consistent. We're on a primary sell signal with a secondary aggressive buy. An aggressive buy signal indicates that aggressive traders can buy stocks but shouldn't be employing margin at this point. More conservative traders should continue to accumulate cash. Advancing issues thumped decliners by better than 4-1 yesterday. New lows continued to better new highs, but the margin has narrowed considerably over the past week. And our new high, new low indicator is now on a buy signal. New high, new low measures the overall rate of change in daily new highs versus the rate of change in new lows, and is typically one of the first indicators to signal a change in the market, positive or negative. Large capitalization stocks outperformed small again yesterday and continue to outperform on a 10-day moving average basis. But we have seen small caps outperform on a daily basis recently. Small caps typically outperform in bull markets. This remains a volatile market. Be careful. Okay. Yesterday, the NASDAQ Composite was up 98.45 points, or 2.27%. We closed at 44.35, closed right at the top of the daily trading range, which is encouraging to the bulls. Trading volume yesterday was higher than the prior day, as we noted earlier, giving us an accumulation day. For you followers of William O'Neill, we are in a market in correction. We have been since February 8th. But notice how 3 days ago, last Thursday, the market closed in the top half of its daily trading range. That's what's known as a pink bar close. That pink bar close represents the first day of an attempted rally. So we have day 1, day 2, day 3 of an attempted rally. The market can record a follow-through day, indicating the beginning of a new uptrend anytime after the 4th day of attempted rally. So we could see this market confirm the attempted rally as soon as today. In order to confirm the uptrend, we would need to have an advance today of at least 1.25% in the NASDAQ on heavier trading volume than we traded yesterday. Right now, the NASDAQ is bracketed by support down here in the 42.92 area and resistance up here in the 45.06 range. Our market timing model is on a primary sell signal, but we have a secondary aggressive buy signal, which indicates that aggressive traders can buy stocks but shouldn't be employing margin at this point. More conservative traders should continue to accumulate cash. Let's take a look at the S&P 500. S&P yesterday was up 30.8 points, or 1.65%. We closed at 1895, but importantly, we took out this area of resistance in the 1867 area, which now becomes support. Trading volume yesterday was higher than the prior day, giving us an accumulation day. The S&P 500 is currently in a market in correction, has been since February 8th. Right now, the S&P is bracketed by support down here in the 1867 area, and probably resistance at this trend line, which goes all the way back to the beginning of the bull market back in 2009. If we were to better that trend line, the next significant area of resistance would be up here in the 1993 area. Our market timing model is currently on a sell signal with a secondary aggressive buy. Before we go, I want to talk about TAL Education Group. TAL is a Chinese provider of K-12 after-school tutoring services for about 1.5 million students via 289 learning centers in 19 Chinese cities. The stock, as we've noted recently, has been working on a 5th stage base. We tried to break out of that base back in this area, but failed. Breakout for that 5th stage base is in the 48.84 area. TAL gets a 72% checklist rating. Yesterday, TAL blasted through its 50-day simple moving average, its 10-day simple moving average, and its 21-day exponential moving average on heavier trading volume than any down day in the past 10 trading sessions. That's our definition of a pocket pivot. Notice the spikes in volume that TAL has gotten recently. Those spikes of volume indicate professional buying in the stock, and that's a good sign. TAL is in a very late stage base. A 5th stage base is a very late stage base, and so this is a very cautious buy here. But we get a 72% checklist rating, and right now 72 is an awfully high rating relative to where the rest of the market is. Aggressive traders that are in a buying mood at this point may want to take a look at TAL Education here. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs, Incorporated believes to be accurate. Ohanneson Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.